Hey guys, in today's video, what I wanted to do was I wanted to do a screen share video and kind of give you an outline of what I'm seeing in the market now that it's been open for several hours. And I wanted you guys to kind of get it from my perspective and to calm down all of your nerves and to kind of give you a better idea of what's going on. Now, I did a video this morning talking about the market before the opening bell based on the overnight action, but now the market's been open for close to 3 hours and I want to do another analysis. Now, based on what I'm seeing right now, there's a lot of uncertainty in the market, and I think that's going to remain pretty high for the next couple of sessions. The fact that the market is bullish right now and the fact that bonds are down is actually a very positive sign, and that's actually telling me that things are cooling off. Also, if you look at the volatility level, you will see that volatility level is already down by about 20%, which is significant, and volatility is starting to fill in that gap right here. That's very, 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 that's positive for the bulls. Also, a few other things I want to bring to your attention. If you look at the Dow Jones, let's just do this really quickly. The Dow Jones is abutting the 50-day moving average. It's still pretty close to the 50-day line, and it looks like it took out the last week Friday's high, and it's already touching the 50-day line. That's bullish. Now, if you look at the QQQ, and I think that the QQQ will have more downside to go, the QQQ is bouncing up really well as well, and the QQQ actually never even touched the 50-day moving average, so it's not even bearish. It's still bullish. Now, we're having a lot of divergence, and I predicted we were going to have a sell-off, and we did, but things are stabilizing. Things are looking better. I think over the next few days, the biggest factor is going to be keeping an eye on stocks that are making 90-day highs and 90-day lows, and I want to talk about that with you right now because I think that's going to be the stocks we want to focus on. So, for example, AMD, nice little ascending triangle there. Hewlett-Packard is breaking out nicely. Gores Holdings, DRNA Pharmaceuticals. Pharmaceutical companies should do pretty well. Basically, the stay-at-home stocks and lithium stocks should do pretty good. But if you look at here, Costco is doing really well, continues to make all-time highs. Lithium, American, Pure Storage, those stocks are making 90-day highs. LRCX is making a 90-day high. Waste Management is making a 90-day high. A lot of the leaders are doing very well. That is very, very positive right now. Digital Realty Trust. Now, if you look at stocks making 90-day lows, we'll look at them now. There's 220 of them. And you could see that the airlines, look at the airlines, look at Twitter, look at AT&T. A lot of the banking stocks are not doing good. Again, the United Airlines stocks, the Chinese stocks. But I think this is going to kind of give us a good little reminder of what happened what happened almost 2 years ago, or in 2020, a year ago, where we saw a lot of the stay-at-home stocks rally and a lot of the transport stocks move lower. What I'm expecting here, let me just give you a breakdown of the sectors, of the 11 sectors. What I'm looking at right now is I'm looking for most of the sectors to bounce back pretty well. Energy looks like it could be a little bit of a downer, but technology and consumer discretionary look like they're bouncing pretty well right now. Healthcare should be pretty strong. Basic materials, it doesn't look like they're ready to fill the gap, and industrial stocks don't look like they're ready to fill the gap just yet either. That's that. They look very similar. But as things get better, or as we have more information on this O variant, the market should begin stabilizing. The fact that volatility level, as measured by the VIX, are holding steady is very, very strong. The fact that tech stocks are holding above the 50-day moving average is very, 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 very positive. The bottom line is I like the fact that volatility is declining. And if volatility continues to decline, the market capitalization will increase. And if you look at consumer discretionary and if you look at technology, they look like they're just beginning to come up and they look like they have more upside to go. So I think we're going to see more upside as the week continues unless we see more defining or specific news surrounding the O variant. If it's going to be just another, things may get worse or things could get worse, then I think we're going to see an upside unless we see real numbers like death rates or real statistics. Because with the Delta variant, at first it was a big deal, and then after a few weeks, things just started coming back up. So I think the overall market structure has not been impacting negatively by this. I like the fact that the put-to-call ratio is now completely within its range, which is telling us that we're no longer bullish. Let me just kind of go here. Notice lower lows, lowers. When we went up here, I said we're going to have a nice big cool off, and we did, but now we're in the middle of the range. So it's not as effective, and I think we're going to stay in the middle for a while. So to summarize, expect a lot of volatility, expect a lot of non-directional trading range, widen your stops, don't use tight stops right now, keep your eye on volatility, keep your eye on the bond market, and keep your eye on the put-to-call ratio. Most importantly, keep your eye on the stocks that are making 90-day highs and 90-day lows. If you continue to see stay-at-home stocks rallying, and if you continue to see airline stocks declining, that's not a positive sign. As soon as airline stocks turn north, things will get much better. So again, just wanted to kind of give you another update, and if things turn south, I'll be there for you every step of the way. You guys definitely want to be in the VIP room today. If you have a membership, I'll do a full analysis for you and talk about everything that's on the table. Folks, Chuck Hughes, he wanted to prove the effectiveness of the triple threat blueprint with real traders, just like us, normal, everyday folks. So he set them loose with a $50,000 simulated brokerage to see what type of returns could be possible and how he's been able to help traders succeed in all three market conditions: bull market, bear market, and choppy market without any trends. Folks, click on the link below to see Chuck's trading strategy in action. And make sure to like this video. Subscribe to this channel if you're watching on YouTube. I need you to stay one step ahead of the market, and you can do that effectively by being the first to be notified when I post my next video. And have a great day.